Man. All right, y'all, what's going on? It's your boy IZ. Man, today is September 10th, 2025. It is 10:14 p.m. Just finished my trading session. But I just want to do a quick little review about something I learned on Nadex that I didn't know before. Let me pull up my notes real quick. 'Cause I wrote this down because I didn't know that this existed. I had no idea. It's called a MOP, MOP, market order with protection. I didn't know what this was. So apparently, um, let me pull up the notes. Market order protection on Nadex. So let's go with the market order, right? So the market order, basically you can buy or sell immediately at the current market price, right? So you got a market order and limit order. So on Nadex, it basically means if you're looking for an immediate execution at the current price. So if you want to enter a trade quickly and you're less concerned about the exact price, the market orders, a lot of times they use with the high liquidity, price volatility, and then you got your limit orders, right? You can buy or sell security or currency security at a specific price or better. It guarantees the price, but it don't guarantee the execution, right? So now get into that. Let's get into the MOP. So the market order, right? You could buy or sell immediately at the current market price, right? And then here's the issue. So a lot of times in a fast market, sometimes the price move really fast. So if you place a market order, right, you might get filled at a bad price to what you expected, right? So what the MOP does, the market order protection on Nadex, apparently, it lets you add protection range, which is crazy. I didn't know this. So you can set a tolerance. I think it goes from, let's see, I think it goes from zero to, I'm trying to check. For binary options, it goes from 0 to $2.05. You can set a range, right? They call it a tolerance. Basically, you set a tolerance for how far the price can move from what you expect. So if the market price is within that range, your order gonna go through. If it's outside that range, your order gonna get canceled. It's not gonna happen, right? So they got a tolerance, default tolerance of 10 cents and then the max of $3, which is really $2.05 down. So in my case, right, I had set a tolerance. Mine was default to 0, which basically means only fill me exactly at the current price, no wiggle room. So if I want to get in at um $5, it got to be at $5, not $5.03, which is pretty risky in fast moving markets because your order might often get canceled if the price move even just a tiny bit. So for example, like let's say like you imagine you buying a snack, right, from your friend at $1 and the mop, right, lets you say, okay, I'll pay up to 10 cents more if the price jumps suddenly. With a $0 tolerance, you basically saying I only want it for exactly $1. And if it goes to $1.01 for even a second, even 1 second, you don't get nothing. Order don't go through. So with the market order, you want to buy or sell immediately at that price, right? So like I said, if the price is at $10 and you click buy, you should pay $10. The problem is, again, if the price can change very fast. So by the time your order go through, the price might be $10.10 or $9.90 instead of $10, so it's not gonna go through. With the market order, basically, it says that I want to buy $10, right? I want to buy it at $10, but I'm okay if the price go up a little higher or lower. It's a limit. It's gonna be in that range, right? So that limit is called a tolerance. That's my tolerance right there. So basically, if let's say I set my default to 10 cent, right? And I want to buy some at $10. That means if the price that means my order basically gonna get filled if the price is from $9.90 to $10.10. So if the price moves a little bit, I'm good, right? So I set mine to $2.05. I may lower it, it just depends, but I'm liking the $2.05 because it moves so goddamn fast, bro. It moves too freaking fast. So basically, the tolerance is like giving yourself a small buffer for a price change, um, versus uh, a small buffer for a price change, right? And then the zero tolerance means no buffer. So the order gonna fail if even you get the slightest change in price, right? Even the tiniest change in price, the order will fail. Even if it's by a cent, even if it's by a goddamn cent. So I'm gonna pull up let me see if I'm gonna share my screen over here. So y'all can see what I'm saying. Like if I let's say I want to buy something at $10, bro. Is it sharing? I'm gonna zoom in. If I want to buy something at $10, ooh, that's terrible. I want to buy something at $10 with a zero tolerance, right? No safety. Again, y'all might know this, but I didn't know this at all. I was wondering why my orders were getting canceled. But let's say if I have a tolerance of 10 cents, that means it's gonna buffer from $10 minus 10 cents, 9.90 in the range. So even if the price, let's say the price is at let's say I want to get in for 10, right? But the price changes quickly from 10 to let's say let's say it goes from with a buffer of zero, I'm sorry, with the $10 with the 10 cents, 10 cents default tolerance, the limit my tolerance is 10 cents. So if the price is oh, I hate doing this. Hey, what happened? Sorry, y'all. Oh, what the heck? Oh, no. Come on, man. It's because the thickness is low, isn't it? All right. Let me make it okay. Let's say it 10 cents. So even if the price, oh, Karen, not right now. Hold on, girl. I'm in the middle of a video. Um, let's say it goes from $9 and 93 cents. It'll still go through. It'll still go through. We're good to go. But if my tolerance is zero here, $10, if it hits $9.93, cancel. If it hits $10.01, cancel. So just imagine you buying, it's like buying, if you were to go see your favorite concert, right? And you gonna buy a concert ticket. So the concert ticket, let's say it costs $50, right? Let's say the price keep changing, right? So the ticket price can change quickly because other people are trying to buy it at the same time, right? So a regular market order, right? No protection, right? And let's say you say, man, I'll buy the ticket right now at $50. But while you're paying, the system updates the price to 55. So the ticket right now is at 50. While you paying, it goes to 55. You're gonna buy the ticket, a regular market order. Regular, we're gonna put R for regular. Regular market order. You're buying it, right? The system updates to 55. So it goes through, but you just pay more. You're gonna pay more than what you expected, which is that 55. Now with the market protection, the MOP, ooh, that's terrible. If you buy it at 50, right? You buy it at 50 and your tolerance is $2. So T is going to be $2. You're okay if the price moves up a little bit, up to $2. So basically, your range is going to be from 50 to 52. Anything in between there, I'm good. So even if the price jumped to 53, if the price jumped from 53, it's going to get canceled. If the price jumps to $51.83, you're good. $51.01, you're good. But if you have a MOP tolerance of $0, anything above or below 50, above or below, in this case, I guess, we'll do like that, above or below 50. Well, that wouldn't be below, but y'all get my point. Anything above or below 50, oh, that just bothered me. Anything below, anything above 50 or below 50. So if T is above or below, it is canceled. That's your zero tolerance. It needs to be at 50 on the dot. So it's pretty strict. So the key idea basically is the tolerance is like giving yourself a little small buffer for price changes. And then the $0 tolerance, no buffer. You know, the order fails if there's a tiniest change. And then you got your regular market price, no protection. If it moves up, you buy it and you pay for it more than you expected. You sell it for more than what you expected. That's pretty much what I learned, y'all. I want to share that with y'all, man. And hopefully that was helpful to y'all. So, all right, y'all have a good night. Peace. On the next video after this one, I'm gonna show y'all my trading, how that's been going, where my account is, some of the losses I had, some of the wins I had. All right, peace.